Okay, well, welcome to another video, and today we are going to be looking at a couple of the charts in the macro technicals report. And so this report looks across the world, across many of the major global markets, across asset classes, and simply looks to try and find some of the best opportunities, the most compelling market setups, most high conviction views, and of course the most relevant markets. And so speaking of most relevant markets, I think probably for many investors, global equities are probably one of the key levers that they can pull, or one of the key assets that they're probably focusing on. And so what we've got here is number 5 in the latest edition. And so, by the way, if you want to have a closer look at this report, just go to the website. You can have a look there. So global equities, correction risks rising. So it sounds pretty ominous, sort of something that you probably want to pay attention to. And now the reason why we're saying that is, first of all, bearish breadth divergence. So we've got here, it's this is one form of breadth divergence where you have price going up and breadth going in the opposite direction. And so what that tells you is that when breadth was at this level, a lot of markets were contributing to the strength there, and at this point not as much. And so what that can actually provide sort of clues for is if there's a bit of weakness showing up underneath the surface, a bit of hidden weakness, and so that's certainly a risk flag to be watching out for. The second one that I wanted to highlight was what I've got here is a sort of view on global implied volatility. So this is what you might call the global VIX. And so that's actually an average of a few different countries' implied volatility indexes. And as you can see, it's down there sitting at basically record lows. And so pretty much for volatility, usually the rule of thumb is low volatility is a good predictor of future higher volatility, and vice versa. So, when you have these spikes here, it's usually the bottom of the market. And oftentimes when you get this crunch down in volatility, it can be something that can precede a bit of a sell-off, a bit of a correction. Certainly it indicates a degree of complacency in the market. And so when you see the VIX, the global VIX sitting down at this level, and then you also look at breadth divergence here, it tends to give at least some rationale to be a little bit more cautious, strictly on a technical basis, and certainly is a warning sign. It means that the risks of a correction are definitely rising at this point. And so I'll leave it right there, and I've got the link to the report down in the comments, the information section there. And if you have any comments or questions about this one, make sure you fire them through into the comment section below, and please do go ahead and subscribe to the channel. Thanks.